Teresa,
Hi,
so
hi,
good to see you here. Oh my gosh.
yeah, I'm glad that you were able to come here to Monterey, my hometown.
Yes, and also meet in person because we
Yes.
did a couple of Zooms and
Yes,
yeah, it's much better
Yeah.
to be together, right?
Absolutely.
The energy is another thing.
It's different.
I love
It's
it.
different,
Love
yeah,
it.
for sure.
Yeah, so we talk about insurance as well, right? That's
Yes.
you doing so much.
I,
So you do insurance, you're expert in that area, including allow the investors to borrow money from their life insurance, right?
exactly.
That's not
exactly.
incredible.
Yeah. I mean, it's a powerful tool, right? And it's something that not everyone knows about, that they can actually leverage the right type of life insurance policy in order to use it for investing, right? Just because it's a way for you to become your own bank. And by what I mean about becoming your own bank is essentially, leveraging a policy that has two components to it. The first component is obviously it's life insurance. So if anything happens to you, whether you get too sick or the Lord calls you home, it protects your family financially, right? The second component is what I call, it's not exactly it, but what I call a high yield savings account, because depending on the type of policy that you get, whether that's whole life or index universal life, or there's several other products under that product line, that high yield savings account can grow anywhere from 3.5% to 6, 7, 8%, even 10 or even more, depending on the type of policy that you get and how your money is allocated within that policy. So definitely, yeah, that is the portion of the policy that you can use then to borrow against your policy and use it for investing if, that's something that people are into.
Yeah. So, and why, if somebody is not interested in leverage the policy and borrow against it, why would they open that kind of policy?
Oh, there's so many different reasons, right? Like just infinite banking is what we call it, where you actually use the policy to, help you with real estate investing or stuff like that. There's so many different use case for a cash value life insurance policy. One of them would be the illness rider, for example. The illness rider is something that protects you if something goes wrong, like you get too sick, diagnosed with either a critical illness, chronic illness, or terminal illness, right? And it's something that I was able to leverage it when I was diagnosed with cancer back in 2021.
Wow.
Yeah, I am cancer-free now.
Oh my God, thank God.
Praise God, yes. But at that time, I wasn't an agent just yet. I had a policy. I was diagnosed with cancer. Didn't know the power of the policy, actually. 11 months later, my husband and I were thinking, maybe we need to liquidate our assets because the cost of all my treatments, my doctor visits, my surgeries and everything was over $275,000.
Oh my gosh, that's a lot.
Yeah, that burden, that financial burden was weighing down on us. And so we were thinking of, okay, maybe we need to liquidate our assets just so that we could afford this, right? And I kid you not, at that time, I just got down on my knees and prayed and asked the Lord, like, what am I supposed to do? What are we supposed to do? Please help us. And that same week, my life insurance agent heard from the grapevines about my diagnosis. And she called and said, hey, you know that policy that I sold you when your daughter was born? I was like, yes. She said, well, that one has illness riders. So if you're worried about your financials, you can accelerate the death benefit. The money that your family would have inherited in case God calls you home, you can use that now while you're alive. And
oh my God,
that was a boulder lifted off my shoulder. So I accelerated that. 2 weeks after I submitted my claim, I got the wire in my bank account. And so that was, I believe, what saved me, because if it wasn't for that, if it wasn't for the financial help through my life insurance policy, not only would I be worried about how am I going to beat this disease, but then also How am I going to pay for my treatment?
Yes.
And so at that time, because the financial burden was lifted off my shoulder, I was able to focus all my time, energy, and focus on beating the disease and also healing. So
Thank God. Oh my God, that's incredible.
Yeah,
It's a miracle.
yes, it is a miracle.
And you said she found you where? Your agent?
So my agent is actually my husband's aunt. And the reason why she heard it through the grapevines is because before, I was a very private person. I didn't want to tell people my business. And I don't want to burden other people about, things that's burdening. Like, I don't want to put that burden on other people. And so I did tell people, not too many people about my diagnosis, just like very, very close, like our parents and our siblings. And it got to her through the grapevines. And whoever told her, thank God did, because then she wouldn't have told me about what the policy that I purchased was, the ability to accelerate the death benefit.
Incredible.
Yeah.
What is grapevine?
Oh, so, like when someone's talking about something and they tell someone else and then they tell us, so it's kind of like the grapevine.
Interesting. I never heard about it.
Yeah.
Okay.
So it's just learning from someone who will learn it from someone else, who learned it from someone else. So it's just like weaving through the grapevine.
Gotcha. Okay.
Yeah.
Good. Good to know. Thank you.
Yeah.
Okay, fantastic. I'm so happy that you found a solution for your situation. And so when you get that money out, so because you continue paying the payments for the insurance, that go back up again, right?
Yeah. So two things. One thing is that if you take out the money not through accelerating the death benefit. So unfortunately, the policy that I had, because I accelerated death benefit, they pretty much completed the contract when they gave me the money, which means then that policy is no longer there. However, if you were to access the money through, just a policy loan or something like that, not accelerating the death benefit, but policy loan, you can pay it back so that it continues to grow. So it's intact, right? And which is what we're doing with Infinite Banking, or what I'm rebranding as Thrive Banking, which is essentially getting that right policy and making sure that it's not only structured properly, but also that it's funded properly. Because by max funding the policy, you're maximizing the benefit of that savings account that's attached to your policy. And when you do that, you're allowing your money to grow, especially if you access the money, taking it out as a loan.
Yeah.
And not using that money for lavish vacations or buying a new car, but rather make that borrowed money to make more money for you, such as real estate investing or investing in a business or something, so that it has a higher rate of return than the cost of borrowing money, which is financial arbitrage, right?
Yes.
If you leverage that, then essentially your money that you've put in the policy is working for you in double time, in two places at the exact same time, right? Yeah. And the way I tell people how this works is, let's just say that, Eva, you have $100,000, and, let's just say that $100,000 is in your savings account, whether that's Bank of America or Chase or whatnot. And you have that $100,000, a fix and flipper comes to you and says, Eva, I have this property. I need $50,000 to renovate it and flip it. And once we sell the property, I'll give you your money back plus 20% or whatever that percentage you spend. I'm just throwing there 20%. And you say, that's a really good deal, right? Now, let's just say your money is in Chase or Bank of America. What you would have to do is deplete that by $50,000 so that you can give that $50,000 to Mr. Fix and Flipper.
Yeah.
Now, what if Mr. Fix and Flipper is a scammer and runs away with that money?
Yeah.
It's your money that they're running away with, right? So now you're left with that $50,000. That sucks.
Yeah.
So what we're trying to do with Thrive Banking is replicate what the banks are doing, because the banks are really good at doing two things. One is getting those high rates of return, right? By giving out loans like mortgages or car loans or whatnot. The second thing is they're really good at transferring risk, because it's not their money that they're giving to those loans. It's our money, the people who put money in the bank account. So if anything happens, it's our money that they're losing, right? Obviously, there's like FDIC insurance and all that stuff, but still, it's our money that they're playing with. So let's just go back to that same scenario where you have $100,000, right? And you lent it to Mr. Fix and Flipper. He runs away. Now your money was at risk. It's all gone, right? Not all gone, but like that. Whatever you let to Mr. Fix and Flipper. Now let's just say rather than your $100,000, rather than in the traditional bank, it's actually with the savings component of your life insurance policy. Mr. Fix and Flipper comes to you. Hopefully it's a good guy this time.
Yeah.
Comes to you and says, hey, Eva, I have this flip. $50,000 is what I need. And once we close, you get your $50,000 back plus 20%. You say, great, that's an amazing deal. Yeah. So what you do is rather than depleting your money from your savings account of your life insurance policy, what you do is you leave it there because it's earning anywhere from 6, 7, 8%. Okay. It's beating inflation, right? Mm-hmm. Inflation is at 3.8% right now, I believe, or even a little higher. But that's like the average annual inflation. So you leave it there. It's beating inflation, so it's growing. Let's just say that $50,000 is what you need. You use your money as collateral. So you leave it there. Mm-hmm. Use it as collateral to get a policy loan. So you get $50,000 from the life insurance company. Mm-hmm. And that money is not your money, it's the life insurance company's money. Right?
Interesting.
Yeah. And that is what you give to Mr. Fix and Flipper to do the flip and earn you 20%.
Yeah.
So 3 things here. The first thing is now you're acting like a bank because the banks are getting that 5% to 30%, when they lend out money. You're getting 20% here. Mm-hmm. Plus, your entire $100,000 is earning let's just say it's 6% average, right? It's earning 6%, right? And you're getting 20% from the flip, right? So now you're getting those high rates of returns like the bank.
Yes.
Second thing is because you're not using your own money, you're using the life insurance company's money. So if anything happens with that deal, it's the life insurance company's money that is lost, not yours. Your entire $100,000 is still in your savings account within the policy, earning 6%. Okay. Right? Now, the third thing here is that now you're actually increasing your working capital because you have your $100,000 earning for you in your policy, plus the $50,000 of the life insurance company's money earning 20%. So in the end, you have $150,000 working for you.
Yes.
Yes, the $50,000 is not your money, but it's working for you. Yeah. Right? Mm-hmm. So the traditional route, you only have your own $100,000 working for you. Yeah. But in this case, the Thrive banking method, you have increased your working capital by what you borrowed from the life insurance company's money.
I love that. It's pretty cool.
Yeah.
So tell me this, if the bad guy lost the money from the insurance.
Yeah.
So now I don't have that 50 to pay back. I know that I borrow from the insurance, but of course they have my policy as collateral.
Yes.
Right?
Yes.
So that means I have to pay that back.
Yes.
When?
So it's a loan, right? It's a loan, and every loan, every debt you have to pay back.
Yes.
And because you're acting as your own bank, you define the repayment terms. Mm-hmm. So you can either decide that you want to pay it back on a monthly payment for the next 30 years, like a traditional mortgage. Yeah. Or you can say, maybe on my next deal, once I get money back, I'll pay it back then.
With the interest.
With the interest. Or you can decide, you know what, I'm not going to pay it back this lifetime. What would happen then is the life insurance company's okay with that because they'll just take it out of the death benefit before they give the remainder to your family when you pass away.
Oh, okay. So they're going to take that, the principal, all the interest accrued.
Yes.
If, let's say, I stay there for 10 years, and then they deduct from your policy and give you the remaining balance.
Correct.
Interesting. I love that.
Although, I would recommend not paying the interest. Just pay the interest because it's just a small amount anyway, so that it doesn't compound on your loan.
Yes.
Yeah.
Okay. Yeah, that's very good tip. Yeah. And they accept that, right? That's great. I love that. Interesting.
Yeah. Yeah.
Cool. Wow. So that's the insurance. There's more things that you're working on, right?
Yes.
For a woman.
Absolutely.
What's the superpower before we go to your next fan?
Yeah, I would say my superpower is, well, there's a few things. If you ask anyone that knows me and have worked with me, they would say that I'm a very detail-oriented and organized person.
Okay.
So that's one of my superpowers. But the second superpower that I have is I have ADHD. But self-diagnosed ADHD, because I want to put my hands on so many different things.
Yeah.
And which is why I believe that my husband and I are serial entrepreneurs, because we want to get into so many different businesses. Currently, we have 4 businesses that we're scaling. The first one is, we've already talked about that. That is the Thrive Banking.
Yes.
Second business is that we're opening up a boba cafe here in Monterey.
That's right.
That should be open in next month, July 2025.
It's going to be the first one in Monterey, right?
Yes, well, it's the first one of our brand here in Monterey. There's several boba cafes here in Monterey, but they are few and far apart. The reason why we decided to open that one up is, it's funny. One is because God, he was calling us to build something that would be a community hub within our community. Yes. But also because it was kind of a little bit selfish. We were out for dinner one time and we're like, let's go get boba. And the closest boba to us was 20 minutes away.
Okay.
And we're like, never mind. We need to bring something here that's so popular in the Bay Area where we grew up.
Yeah.
So that's business number 2. Business number 3 is that we have a digital marketing agency as well.
Yes.
Because I believe I told you this, Eva, like my Mount Everest is to help 5,000 people get out of the hustling just to survive and help them get into real estate investing so that they and their families can finally thrive. And it's what I'm calling the Mount Everest. Oh, not the Mount Everest, my Thrive Banking movement. And it has 3 pillars. So the first business that I mentioned earlier, which is Thrive Banking, that's the first pillar, so that we can get them into policies that will build equity for them. And once they have enough equity in that, they can then jump into the second pillar, which is what I call the Thrive Capital. It's essentially an investment club, real estate investing club that I'm building out as well. And once they're in there and we have enough capital, we'll then jump into investing into the third pillar, which is the Thrive Impact projects, which is essentially our purpose-driven projects, so that not only are our money helping us thrive as the investors, but also helping the community thrive.
Yes.
So that's my Mount Everest. And it's a huge goal. Helping 5,000 people in 5 years is such a scary thing to take on, but I know I can reach it with the help of people. And so there's 2 things that I'm looking for right now to help me with my Mount Everest. The first one is connectors. So if there's any connectors out there who love networking and talking to people about things that they're learning, my ask is to help them, connect with me, and I will, work with you in building this. I have an affiliate marketing program for that. So connectors will essentially, once they send referrals to me, then obviously they'll get an affiliate fee for that. But then the second thing is that I need life insurance agents to help me build these policies for my clients, right? And what I'm seeing is that a lot of life insurance agents out there, they don't have any skills in selling or in marketing. Yeah. And so that's where the third business came about, is that I want to help other life insurance agents to build their websites, help them with social media, help them with just promoting their business. Yes. And so that is the third business. And the funny thing is that this Gator Challenge that we're doing with Case Morby, what I realized is that a lot of these Gators also don't have experience in selling or in marketing. And so I've expanded that to help other Gators as well in building their websites, and connecting some of their other platforms within Go High Level. So that is something that I'm doing. So that's the third business. And then fourth business is...
yeah, that I thought so, that you have a 4, because I count 4. You talk about 3.
And the fourth business is real estate. You're very well aware of that.
No. Now then it's 5. I'm counting the insurance drive,
the insurance drive,
the boba,
yes,
the digital marketing, the school to the agents,
The what?
They school to the agents, like training them? The
Well,
agents?
I'm not training them just yet. It was just the digital marketing for the life insurance agent.
Okay, so that's the digital marketing.
Yeah.
But you have the fund.
No, the fourth one is real estate investing. So my
That's
husband.
the fund.
Yeah.
That's how you're going to get the... No.
No. The fund is the real estate investing.
Okay, the fund is the real estate investing.
Yeah.
Okay. So you want to create a fund with a group of investors, and then they can come in together and buy
In the club.
bigger
Yes.
things like RV park or multifamily things.
Yes.
Okay.
So either buy investments or just lend it to other operators, right? So that's what the fund is for.
Okay, lend it to the other operators. So it's not going to be to buy business together or buy
It could
property
be
together.
It could be.
To lend.
Yeah. Well, it's an investment club that I'm building, right? So that investment club, if it makes sense for us to buy an asset and be partners in that asset, then we can do that. Or we could let's just say we don't have an operator just yet. Maybe we could just lend our money instead. So, yes.
Yeah, because you have to put your money to work since it's there. Stop.
Exactly.
Love that. Great. So how far are you in the process of creating this fund club?
So I have some soft buy-in so far, but we're not at the point where we have enough capital to start funding projects just yet. The hiccup right now is that I need more people in the Thrive banking pillar first, that we can then build their equity so that they can jump into.
They can use that money to bring to this fund. Okay, so you're doing a connection in there.
Correct.
Of course, it's smart, right? Since they put in there, so you put here too.
Exactly.
You want everything, right?
Exactly. That's my ADHD. So yes.
Yes. Okay. So awesome. That's fantastic. I am
ADHD.
ADHD too. So of course, I think all of us.
Diagnosed.
Is your husband integrator?
He is. Well, he's more an operator.
Operator.
Yeah, so he likes, he's the one that's actually hands-on on our boba cafe and all that stuff.
Okay.
He's also hands-on on he's an integrator, I would say. Yeah.
Depends.
He does
Because
the visual.
we need an integrator. Because otherwise, my goodness. So, my dear, that's fantastic. Thanks so much for being with me. And I'm so happy that we are here in beautiful Monterey, in your hometown.
Yes.
And let's catch up again.
Of course. And thank you for having me, Eva.
My pleasure.
This has been
Enjoy to do business with you and make things happen. And I'd love to help with the fund as well.
Of course.
Yeah.
Of course.
Let's connect outside of this.
Yeah.
Thank you, dear.
Thank you so much.
Thank you.